Welcome to Thank God It's Friday. We are just about 2 weeks away from the new year, and there are going to be plenty of challenges in 2017. And to take us through all those challenges, we have with us Mr. S. Naren, the CIO at ICICI Prudential Asset Management Company. Thank you so much for joining us, Naren. I'm going to start with my first question, and I want to understand what your reading is on RBI's status quo as far as the interest rates were concerned. What I'm trying to understand is, given their higher focus on inflation and not really on growth, do you really think the markets probably overestimated the negative impact or the hit from demonetization?
No, I think the RBI decided to postpone the decision, watching exactly what is happening in this market. And if you look at the inflation data, actually the inflation data came out pretty low.
Yeah.
So if their concern was inflation, actually inflation has been steadily going down. Our view is it has kind of postponed the rate cut, and we believe that the rate cut would now happen in February. We had believed that there would be a rate cut in December, but that didn't happen. But we think, the scenario in India is such that we still are in a deleveraging world, in a deflationary world in India relative to where we were, and we could have interest rate cuts in India. That's the way we are looking at it.
But did the RBI's statement that their higher or focus was on inflation rather than addressing growth, did that come as a surprise to you?
I have a feeling we have historically seen that reserve banks in India has always been cautious, particularly before they see a Fed meeting where a rate increases lightly, because they're not looking at only inflation, they're looking at foreign exchange, and they were possibly worried about excessive volatility due to dollar moves, which I believe was more responsible for the decision. Our view is that, currency, if Chinese yuan has depreciated, for Indian rupee to depreciate in line with Chinese yuan is something which we find acceptable. And we believe that India requires lower interest rates and maybe a more depreciated currency for the next few quarters is our view. So we think maybe it will play out now in January, February. By February, the other advantage would be the budget would have been passed. I mean, the budget would have been announced in February, because this year's budget is on February 1. So maybe they'll have all the information available to take the right decisions in February, which they decided to pass on in December.
Because the RBI clearly denied that the Fed played any role in their decision. But Agam, you have a question?
Oh yes, of course. Actually, I wanted to come down to demonetization, and with whatever data we have so far and whatever data you read so far, how would you assess whether or not this exercise has been fruitful to what the government was targeting?
See, I think it's very difficult at this stage. Think about it, if the money comes into the banking system and a lot of money has come back to the banking system, there is a trail. It is not that money can come without an account number into the banking system. And the money goes out of the banking system. So I think it is too early for us to say as to what is the real impact of demonetization. And our view is that, see, whenever a step is taken to reduce black money, and I go back to the 90s when we used to see physical share certificates and these transfer deeds, which were greenish in color, and most of you would not have seen them. There was a process where those share certificates, transfer deeds and physical documents got converted to demat. And similarly, there was a face conversation where all trading used to happen. It became internet, it became electronic trading. So that process was not as smooth as what people think of. But the impact has been seen subsequently in the 20 years from then. So I believe that a step where you're trying to reduce black money cannot be an easy step, because people are used to dealing in cash. So, cash is different from black money, and India has had a culture of dealing with cash. In fact, what I discovered is most people don't know that they can use their debit cards in many places other than the bank for drawing money, because the culture doesn't exist. So I think, there's a process, and I think the long-term impact will be seen much later. I remember way back in 70s when noon meal scheme was started, in Tamil Nadu, it was perceived to be a scheme which was like a handout.
Right.
But it improved a lot of indicators on the non-socio-economic side,
Right.
which has helped the Tamil Nadu economy in the last 20 years. So that's how we view demonetization, and not look at it from the point of view of queues and the problems that people are facing at this point
Right.
of time, which they're certainly facing. But I think there'll be a long-term positive impact.
But there is no factor which would make you worried about the success of this, which should, of course, as you said, that in the long term would be a good thing.
See, I think if you manage to reduce the size of the black economy, if you manage to improve the compliance in income tax,
Right.
I think if you are managing to do these things, it will be a massive achievement.
Right.
And that achievement cannot be measured. So I think at this stage it is very difficult to say whether it is successful or not.
Okay.
But I would say the government is very determined to move in this direction, and
Yeah.
I think that will make India very different over a period of time compared to the old India, which was always cash driven, black money driven
Right.
economy that we had many years back.
Right.
Naren, Q3, Q4 earnings are a complete washout, and that is something which has been highly accepted. But and of course you won't really look at a short term, from the short term perspective, being a buy side mutual fund person. But what I'm trying to understand is what sort of a FY17 earnings growth number would clearly be a disappointment, or rather what number do you expect to see which could at least be reasonably acceptable?
I don't think we look at that number. What we have believed is that there are three factors of production: land, labor and capital.
Right.
The effect of demonetization has reduced, will reduce land cost is our view. It clearly interest rates will also go lower. So labor prices have been coming down over the last 3 years. Our view is that if you had all these three costs of production coming down, land, labor and capital, that sets the stage for a big bull market. If you go back to a bull market of 2002 to 7, land was very cheap in 2002, interest rates were very low in 2002, and labor costs were very cheap.
Right.
And that set the stage for a good bull market. So I would say similar to that, we are having a situation in 2017 first half, where all three factors of production prices are coming down, and that could lead to a big benefit. In the near term, earnings growth is quite meaningless because it's very difficult to predict them. If you have a postponement in sales due to these reasons, do I have to worry about 1 quarter earnings or not? Has it going to change the growth rate of economy in the long run? The answer is no.
Right.
Is it likely to create a more transparent India? The answer is yes. Can a transparent India lead to lower tax rates on a lot of things? Yes. So these are things which we will see, but I doubt we will see it in the first 6 months of 2017.
Right.
I think the real benefit we will see in the second half of 2018, and we've been recommending investors to invest over the next 4 to 6 months with a 2-year view, because we think that the near term is going to be volatile because of the risks on earnings.
Right. So what is the upcoming budget going to be all about, and how would you decide if that is going to be a good budget in the first place?
I think there's so little written about the budget at this point of time.
Yeah.
The focus has not been on the budget, so it's very difficult for me to say. I've not seen a single article on the budget, even in the media.
Right.
So I don't know what really this budget is going to be focused on.
Right.
But we believe that, I think this government has made it clear we are looking at digital India, we are looking at lower black money, we are looking at ways to plug loopholes in taxation so that the black money goes down. I think this is what they are looking at. If that is what they are looking at, I believe that the budget will be focused on these areas.
Right.
And that's what we think. Having said that, this is the last important budget for this government, because the remaining budgets are closer to the elections.
Right.
So
right.
I think from that point of view, this budget is going to be important, and it would be also important depending on where we see GST. Suppose we see GST implementation in the next 6 months, there's no point in tinkering with excise duty rates just before GST.
Absolutely, yes.
So it can be a budget which is just focused on the direct tax area,
Right.
and not on the indirect tax area. These things we will come to know only in January. It's a
Right.
bit too early at this point of time.
Okay.
So, given that the budget, we're much closer to the budget, in all likelihood, we could see a lower fiscal deficit this year, and hence there is a high likelihood of government spending more on infrastructure, allocating more towards the infrastructure sector. So, is infrastructure a space that you started looking at already?
Yeah. Clearly, over the last 3 months, we have always been believers that infrastructure is a theme to invest in with a 2-year view. And from a portfolio point of view, as a fund manager of my schemes, I have been underweight many of the consumption sectors because I believe that the trust would go into infrastructure.
Right.
It can both create employment, and that is the biggest area where there is a problem. And most of the stocks in those sectors haven't done well for the last 10 years, I would say.
Right.
So that made us focus on infrastructure significantly in the last 3 months. But because people haven't made money in that area, not too much money comes into that sector.
Right. And you brought up consumption right now, and so I want to talk about the consumer discretionary space, because there are a lot of people out there who expect that the pain owing to demonetization could last longer than expected, which means that the recovery in the consumer discretionary space could take longer. Are you of that opinion as well?
See, I would say even 2 months back, our portfolios were basically positioned with an underweight stance on consumer discretionary.
Yeah.
Primarily because those sectors were really cheap. There is no part of the world where you see automotive stocks trading at 30 and 40 trailing PE.
Right.
And embedded growth in those companies were very large.
Right.
See, we always believe in a cyclical approach, and in that cyclical approach, we believe that the baton will move from consumption-oriented sectors to either low unit value areas or infrastructure sectors.
Right.
And that's how we have been positioned as a mutual fund. So to us, correction in some of these stocks was something which we were believing in. And we continue to think that many of these sectors are trading at reasonably high valuations,
Right.
that there is scope for correction even from here.
Right.
Naren, Bharti Airtel is your top holding in one of your funds, and I'm talking about ICICI Prudential Dynamic Fund. As of November, the month of November. I know you won't talk about stocks, but what I'm trying to understand is that was it purely a contrarian call or was it a valuation bet, and your thoughts on telecommunication sector?
See, I think none of us can actually recognize that telecom has changed significantly. It is because telecom has changed significantly that you can start off as a digital channel today and expect most of us to see it on the digital channel. Go back 10 years back, could you have started a channel which was just started on a digital platform? So things have changed drastically in the last 10 years. The most important product for most people is their mobile phone, not their purse.
Right.
And I believe that despite that, the entire telecom sector in India was trading less than the market cap of a single automotive stock in India.
Right. Yeah.
So I felt it is quite unlikely because this has touched almost 70-80 crore Indians, and for 70-80 crore Indians it is the most important consumer durable.
Right.
And the market cap is lower than that of a car company or something like that. So
Yeah.
I felt that it is a very simple call that we are more dependent on telecom than before, and with data also coming up, it is something which is very, very critical. And you have the bottom of pricing at this point of time due to the entry of new entrants. That becomes a very good contrarian opportunity for long-term investment. I was quite surprised to see that the market cap of telecom sector in countries like Indonesia, Malaysia, Thailand, which have populations which are fraction of India,
Right.
is higher than the market cap of telecom companies in India.
Right.
So I saw that as a very good long-term investing opportunity based on your consumption and by consumption.
Right.
I think another stock that I thought was missing from your portfolio was TCS. Now, while you have increased allocations to HCL Technologies, Infosys, Tech Mahindra, and even Wipro, so is it the Tata versus Mistry war that has been bothering you?
No, I think this is not an area I talk on, but I think you should look at the entire portfolio and see what where we stand. and I'm not allowed to talk on all these things on media. But if you see my portfolio, you'll find all the data. You look at the top 5 holdings, you'll know what all are there.
Right.
And there are ways in which you can actually invest in different stocks, and it is based on our analyst who covers the sector, what his view on different stocks in a sector.
Right.
And it has nothing to do with an individual company. It can be more to do with valuations and less to do with the outlook for that company.
Okay, fair enough.
And finally, how do you read 2016? Based on whatever you have seen in 2016, how are you looking at 2017? I believe that you already mentioned that you are expecting some amount of volatility in 2017, but on the whole, can we expect a much more positive market and a much more positive view from here on?
See, clearly we'll have a positive view, but the near term is going to be very, very volatile.
Right.
I think we can't look at it only from a domestic point of view. You would have seen the massive increase in interest rates in US, and bond yields have gone to 2.6%. There was a second rate hike yesterday with promises of more rate hikes in 2017
Right.
in US. So I would say that if you look at it from a global point of view, there is a lot of scope for near-term volatility. Having said that, our view has always been that for the next 2 years, the operating cycle will improve. And you will see capacity utilization going up, you will see earnings going up, and that would lead to market returns being better.
Right.
But having said that, we don't have an outlook for the next 3 months, and we have been believers that volatility could be higher once people come back from leave, because many of them have actually gone and seen a massive move in dollar, massive move in bond yields, and therefore we think nearer term the volatility can only increase, not come down.
Right. So there you have it, guys. We are expecting some amount of volatility in 2017. It is going
in the
to
first quarter.
In the first quarter of 2017, and we may have some challenges there. But on the whole, of course, the outlook remains positive. And with that, I'm going to thank you, Mr. Naren, for joining us. And as for you guys can come back next week for yet another edition of Thank God It's Friday. Till then, it's goodbye.